What is going on, everyone? It is your boy Mr. AG back with another video, and today I am going to show you something that should be front page news on every financial website in the world, but is barely getting any attention from the mainstream media. China's central bank just bought gold for the 16th consecutive month, 16 months in a row, at near record prices. And I am going to explain to you exactly why this is happening, what it means for the future of the global monetary system, and why the official numbers you are seeing are almost certainly a fraction of what China is actually accumulating behind the scenes. Before we dive in, I need you to hit that subscribe button and smash the notification bell, because I put out precious metals content regularly, and if you are not subscribed, you are going to miss the analysis that actually matters. And drop a comment right now telling me where you are watching from. Are you tuning in from Asia? From Europe? From the United States? Canada? Australia? The Middle East? I want to know where the Mr. AG community is growing, because we are building something special here and I want to connect with all of you. Now let me give you the standard disclaimer, because I have to say this every time. This is not financial advice. I am not a licensed financial professional. I am just an Asian guy who pays very close attention to central bank behavior and connects dots that the mainstream financial media either cannot see or refuses to acknowledge. Do your own research. Make your own decisions. Consult a professional if you need guidance. But understand that what I am about to show you is publicly available data that has massive implications for anyone holding dollars, anyone holding gold, or anyone trying to understand where the global economy is heading. Let me start with the headline number, because it is significant even though the media is treating it like a footnote. The People's Bank of China added 30,000 ounces of gold to its reserves in February, bringing its total official gold holdings to 74.2 million ounces. That is valued at approximately $387.6 billion at current prices. Since November 2024, the PBOC has increased its gold holdings by a total of 1.4 million ounces. This is not a one-time purchase. This is not a response to a single geopolitical event. This is a systematic, persistent, relentless accumulation strategy that has been running for 16 consecutive months without interruption. Now let me ask you something. Why would the central bank of the world's second largest economy keep buying gold month after month after month, even when prices are sitting near all-time highs? Think about that for a second. These are not retail investors panic buying because they saw a scary headline. These are the most sophisticated financial strategists on the planet, managing a $3.4 trillion foreign exchange reserve portfolio. And they are choosing to add gold at prices that most Western analysts are calling expensive or overvalued. Either the PBOC is completely irrational and wasting China's money on an overpriced asset, or they know something that the Western financial establishment does not want you to understand. I will let you decide which explanation makes more sense. And here is where the story gets really interesting. The official PBOC purchases are just the tip of the iceberg. In late December, reports emerged that China purchased a record $961 million in gold from Russia in November 2025 alone. Let me say that again because I want it to sink in. $961 million of gold in 1 month from Russia. That is the largest gold deal in the entire history of bilateral trade between these two countries. And it was not even a one-time spike. The month before, in October, Russian gold exports to China were estimated at $930 million. So in just 2 months, October and November 2025, China imported nearly $1.9 billion worth of gold from Russia. And here's the crazy part. Those 2 months represented almost all of the bilateral gold trade for the entire year. From January through November 2025, China imported a total of $1.9 billion of Russian gold, which is almost 9 times more than the same period in 2024, when total purchases did not exceed $223 million. Let me break down what is actually happening here, because the implications are enormous. Russia is one of the largest gold producers in the world. They have been cut off from Western financial markets due to sanctions. They need buyers for their gold who can pay in currencies other than dollars. China wants to diversify away from dollar-denominated assets and build up strategic gold reserves. Russia needs a market. China needs gold. The sanctions that were supposed to isolate Russia are actually accelerating the formation of an alternative financial system that operates completely outside the dollar. Every time the West weaponizes the dollar through sanctions, every time they freeze foreign exchange reserves, every time they cut countries off from the SWIFT payment system, they are teaching the rest of the world a very important lesson. Dollar-denominated assets are not safe. They can be confiscated at any moment if you fall out of favor with Washington. And the only truly sovereign reserve asset, the only asset that cannot be frozen or seized or inflated away, is physical gold sitting in your own vaults. China learned this lesson. Russia learned this lesson. The central banks of the Middle East, of Southeast Asia, of Africa, of Latin America are all learning this lesson. And they are responding by accumulating gold at the fastest pace we have seen in decades. Now let me tell you about the numbers that should absolutely terrify anyone who is still fully invested in the dollar system. According to Société Générale, one of the largest banks in France, the official PBOC gold purchase figures are almost certainly a massive understatement of what China is actually buying. Their analysis, based on the contrast between bullion imports, domestic production, and official reserves, estimates that Beijing's true gold purchases may have been 10 times higher than what the PBOC reports. 10 times, not 10% higher, not double, 10 times higher. Based on UK gold exports, which are one of the most reliable indicators of physical gold flows because London is the center of the global gold market, Société Générale estimates that China has added more than 1,080 tons of gold to its reserves since mid-2022. The official PBOC figures show an increase of about 25 tons over that period. That is a discrepancy of over 1,000 tons. 1,000 tons of gold that has flowed into China but does not appear in the official reserve data. Where is this gold going? Some of it is probably going to state-owned enterprises and sovereign wealth funds that do not report to the PBOC. Some of it might be going to the Chinese military for strategic reserves. Some of it could be held in offshore accounts or through intermediaries that are not captured in official statistics. The point is that China is almost certainly accumulating far more gold than they are publicly disclosing, and they are doing it systematically over an extended period of time. Now I want you to think about why a country would hide the true scale of its gold accumulation. If China announced tomorrow that they had actually added 1,080 tons of gold to their reserves instead of 25 tons, what would happen to the gold price? It would explode higher. Western investors would panic. Central banks around the world would rush to accelerate their own accumulation before prices got even higher. It would trigger exactly the kind of monetary reset that the dollar-based system is desperately trying to avoid. So China stays quiet. They accumulate slowly and steadily, month after month, purchase after purchase, without drawing too much attention. They let the Western media focus on stock markets and interest rates and whatever political drama is dominating the news cycle. And while everyone is distracted, they are methodically building the largest gold reserve in the world, preparing for a future where the dollar is no longer the unquestioned global reserve currency. Let me ask you a question, and I want you to really think about this. If you had $3.4 trillion in foreign exchange reserves, if you were managing the financial future of 1.4 billion people, if you could see the trajectory of U.S. debt, U.S. deficits, and U.S. monetary policy, what would you be doing? Would you be holding more dollars? Would you be buying more U.S. Treasury bonds, paying 4% while inflation runs higher? Or would you be converting as much of that paper wealth as possible into the one asset that has maintained its purchasing power for 5,000 years of human history? China has made their choice. They are buying gold every single month, at record prices, while publicly downplaying how much they are actually accumulating. If that does not tell you something about where the smart money thinks this is heading, I do not know what will. And China is not alone. Central banks around the world have been net buyers of gold for years now. The World Gold Council has documented this trend extensively. Countries like Poland, Turkey, India, Singapore, and dozens of others have been adding to their gold reserves. Even countries you would not expect, like Uganda, recently announced they are launching domestic gold purchasing programs. This is a global phenomenon. This is a coordinated move away from dollar dependence. And it is accelerating. Now let me talk about what this means for the gold price, because that is what everyone wants to know. When you have the largest buyer in the market, China, systematically accumulating for 16 consecutive months, when you have evidence that their real purchases could be 10 times higher than reported, when you have Russia redirecting their gold exports to the east, when you have central banks around the world in accumulation mode. You have a structural supply and demand imbalance that is going to drive prices significantly higher over time. The gold that flows from west to east does not come back. When China buys gold from London, when they import gold from Russia, when they purchase from African and South American mines, that gold goes into vaults and it stays there. It is not coming back onto the market. Every ounce that moves east is an ounce that is no longer available to satisfy Western investment demand or industrial use. The float is shrinking. The available supply is declining. And the price is going to reflect that reality eventually, no matter how much the paper markets try to suppress it. The current price of gold, somewhere around $5,200 per ounce, might seem high compared to where it was a few years ago. But if China has really been accumulating at 10 times the reported rate, if they are preparing for a major monetary shift, if they are positioning for a world where gold plays a much larger role in the international monetary system, then $5,200 might look like a bargain in hindsight. We might look back at these prices the same way we look back at Bitcoin at $1,000 or Amazon stock at $100 and wonder why we did not buy more when we had the chance. I want to be very clear about something. I am not predicting the timing of any major monetary reset. I do not know when or if China will officially announce larger gold reserves. I do not know exactly how this plays out or what the ultimate price target for gold might be. What I do know is that the largest central bank buyer in the world is accumulating aggressively. The official numbers are almost certainly understating the true scale of accumulation, and the trajectory of this trend has been consistent for years now with no sign of slowing down. The question you need to ask yourself is simple. Do you want to be positioned the same way China is positioned? Do you want to own the same asset that the PBOC has been accumulating for 16 consecutive months at near-record prices? Or do you want to trust that the dollar-based system will continue working exactly the way it has, that nothing will change, that the massive debts and deficits can continue forever without consequences? I know which side of that bet I want to be on, and I know which side China has chosen. All right, everyone, that is going to wrap up today's video. If you found this analysis valuable, make sure you subscribe to the channel and hit that notification bell so you never miss an update. Join our WhatsApp community where we discuss these moves in real time and share insights that I do not always put in the videos. The link is in the description below. Also follow me on X, formerly Twitter, where I post charts, quick takes, and breaking news throughout the day. Drop a comment and tell me what you think about China's gold strategy. Do you think the official numbers are accurate? Or do you believe the Société Générale estimate that real purchases are 10 times higher? Are you accumulating physical gold yourself? Let me know in the comments. This is Mr. AG signing off. Stay informed, stay positioned, and remember that while paper currencies come and go, gold has been money for 5,000 years. Peace.